Good afternoon. This is Dr. Ken Long from Tortoise Capital Management, and we want to take a look at a series of chat room case studies from March 5th, 2014. The first one to look at is a long-term swing trade that we've been taking, and this goes back to 10 February 2014, and the symbol is corn, C-O-R-N, a commodity exchange traded note. And this is a 3-year chart looking at weeklies. And one of the things that we observed was essentially a washout pattern on a weekly basis where the sell-off had stopped being so harsh. We were starting to see some positive volume on the percent price oscillator 1028. We saw some separation to the upside by the fast and over the slow, and we see a shift in the balance of power right here. And so we were able to identify what we thought of as a multi-year interesting moment. And so we dialed down onto corn on daily charts, and we observed this swing low and dragon horns outside of the floodplain. So this is a Z trade score. We were able to place some entries on partial positions here as price moved from the Z trade back to the Bollinger Band mean. And then the final position gets put on here as we go to sideways quiet channel pattern number 5 in the regression line crossover system, because what we observed was the Z trade pattern 7, a higher low, a second higher low, and then inside here we have sideways quiet channel. Sideways because the slope of the Bollinger Band is flat. Quiet because the Bollinger Bands have pinched in. Channeling because you have price and both the 10 and the 30 regression line inside the river. And now our entry is upon price leaving the river 31.25. That completes our position. We've paid for overnight risk with the gains from entries down around 29 $29.80 and $30 even. So we get the final position on here. It moves very well in our direction. Today looked to me like a good place to be locking in trade profits on corn, or at least managing this position after a really successful run-up. And with price outside the floodplain on the north for 3 days in a row and then a gap up and starting to sell off, I would be perfectly content with that trade with an exit at 33.48. But your mileage may vary and your belief systems may vary too. What I like is that this is, I think of that as the first leg up after that multi-year horrible sell-off. And now we've made some money in here that we can start managing subsequent trades. I mean, this exit here is also a Z trade frame for a reversion to the mean back to 31.5 is the next logical reversal trade if we see continued sell-off. At the start of the day, I had some technical stuff to do at work with some accreditation meetings for our college, and so I only had time to do a little bit of stalking. And this morning I'm stalking the Aussie dollar. I mentioned in the chat room, and the trade that actually unfolded after I came back from my meeting. Here's the trade frame and my entry here at 89.65. I'm using a 10-cent stop down here to 89.55. I thought about the stop in here at the dotted line, but I'm not primarily a forex pairs trader, and I'm using 15-minute charts, and so I used the wider 10-cent stop. I think you could have actually gotten much tighter in here, but we get a nice entry. It takes out this swing high, blasts through the edge of the river, through the edge of the floodplain, gets up to 89.80 about 45 minutes later, and starts getting this reversal price action here. So I go ahead and take my exit at 89.80 and get 1.5R. So I was pretty happy with that one. I'm going to go through a series of YM trades. That's the futures that tracks the Dow Jones Industrial Average, or the Dow E-mini. The first one, this is very near to the market opening, and so it's at 8:30 in Central Time, and so we get us the sharp sell-off. I see my favorite morning hook pattern developing here. Three chances to fail. It didn't. It's a Z trade pattern. I get a green, a doji, another green, and I get my entry at 16,364. I'm using a 10-cent stop. This shows at 8 cents, so the 10-cent would be actually be down here, but this is a reasonable place to put it as well. We get the move. These are on 1-minute charts, so like 3 minutes later, I'm holding 1.1R. It's starting to stall in here, and I said, Dad, let me just grab my 1.1R and get money in the bank on the first trade. This is the next trade entry here. This was that first trade pattern, and I've marked up the chart in this way to reflect my decision making. And the quiz is, what do all these lines and arrows mean? How am I using that to help me frame the trade? And maybe this could be of some help to you too. What ended up happening here, just for the record, is right after this entry, get a nice run up all the way here. As it's moving up, I'm showing right here, I move my stop up to break even plus dinner for 2, and it gets stopped out here shortly after this chart was made. But the point is, the trade frame is what's of interest. And so I've identified like 9 different points to take a look at. Point number 1, this top blue line in the channel to me was simply a place where it would likely retest the previous swing high, and right near where it opened with a bit of a gap down, but that was an important price level to me, about 16392. Point 2 was the support from real candles at the edge of the Bollinger Band here right after the open. That's where that morning hook occurred, and that was the first trade. So for context, this is that first trade that cashed 1.1R from here up into here. So 1 and 2 form the reasonable trading channel for me to think about. At 3, I see after the sell-off finding support and then moving higher. I see 3 as a higher low compared to this support level. So that's an important point for me. Point number 4, same idea, a higher low that held the real bodies right in through here. So I'm saying 1, 2, 3 lows, and the last 2 are 2 higher lows. Point number 5 is my 1, 2, 3 entry at the Bollinger Band mean, and I want to get into this trade here so that if this works and gets to the far side of the river, which it did, or the far side of the floodplain, it's going to test this support or this resistance level, and if it breaks through there, then I'm expecting point 8, great big move. So I like my entry here at 5. The red line at 6 is my initial stops. That's the 10-cent initial stop from here to here. Point number 7 is the decision after the spike up to 1383 or so 16383. I move that to no lose plus dinner for 2, so that I don't lose any money on this trade. That's point number 7. 8 was if I'm front running this so that if it breaks through 92, then it's off and running, and then this could be a big win. Point number 9 for the other side of the trade, that if I get stopped out and then it falls through the blue line, then I'm thinking I need to be short somewhere down here around looks like about 1360 is where I need to be getting short, which turned out to be the trade. So those are the 9 points. That's what all of those lines mean to me, and those are the points to review. We're on the 1-minute charts here, and this is a trade from a P7Z trade, and it was an entry at 16360 with an initial stop here, and then an exit at this 16375 for 1.5R, and it's P7, so the Z trade frame looks like this. We have a price that had fallen out of the river and floodplain, almost out to the 3Z, minus 3Z Bollinger Band. That's the blue circles of the alert. I make a 1, 2, 3 entry on this one with an initial stop here. It moves in my favor, blasts right through the Bollinger Band mean, gets all the way to the far side of the river, makes a high, closes here, opens here, makes one little bump north and starts failing again. I don't like the two higher or the two lower highs, and I've got 1.5R in hand, so I go ahead and take the exit at 16375 for 1.5R. This is that trade here, and we've got actually the first trade and now the second trade, the 1.5R trade in here. And now the third trade in this series is a quiz. It's called Name That Pattern. And what we're seeing is price outside of the floodplain, a 1, 2, 3 entry as it we enter it not later than entering the river with a stop here 1 SD below at the edge of the floodplain, and you should recognize that as a pattern 7. That's a Z trade. Shifting out to the 15-minute view, this is still on YM, and this is the open. Just one thing, just to notice, we're working on a indicator to assess the relative amount of signal versus noise. I want you to just notice highlighted in yellow on these 15-minute charts are the wicks compared to the real bodies. And what you can see in this very choppy, noisy kind of a market is very low signal, high noise because of the size of the wicks as compared to these very trending kinds of moves that we're seeing over here. That's sort of the basis for the argument of having a signal to noise indicator, and that's what we're working on. When I see market conditions like that with high relative noise, I'm looking to take profits sooner and then play reversals from these extremes like you've seen in the last couple examples on the Z Z trade. Now this is one where I actually took the trade on the 15-minute charts. I'm looking at this as a key support level that comes all the way back over to here. When that gets violated, I'm getting short. I like the fact that the trend for the day is down. You can see how the Bollinger Band mean river has been flowing up, and then today enough data on the 15s to have it roll over. It's been failing at the Bollinger Band mean. In this case, it failed right at the river and then takes out the support of the real bodies. And so I want to get short here at 16,360. I'm going to use a 10-point stop at the top of this candle. My target for this, I'm just going to extend these lines down here. I'm looking at 16,340. So there's a 20-point move to the downside with a 10-point risk. There's my 2-to-1 trade. And so I like that. And I would just compare that this kind of a trade with the other pattern 7Z trades that we saw the previous day, where we go from shore to shore. This is from Z minus 3 to Z plus 3, from plus 3 back to the Bollinger Band mean. Find support here at Bollinger Band mean and then a resumption. You can buy this not later than leaving the river. There's a 1, 2, 3 entry. That would actually be a P2, where we have a regression line crossover style trade that was successful from minus 3 to plus 3, comes back, finds support at the mean, and then continues. That's as pure an example of pattern 2 as you can find. We get a move outside the floodplain again. This is a P7 Z trade, and it comes back to the Bollinger Band mean. That's your P7 type trade. And so that context sort of provides information on what are the sizes of those intraday moves in this the Dow E-mini. And so right now we're short from 16,360, 10-point stop. This is that trade. The entry here, it rolls over for us nicely, comes all the way down to 13,336. I take my exit at 16,340 as programmed, and there's the 2R trade in about 45 minutes. I guess that's an hour. So there's the 2R trade there. The next in the YM series, just one way to look at this trade here. This was that last one. This one has been failing lower and lower and lower, and I like to look at the difference between the maximum favorable excursion and the reference line, in this case the Z plus 3, and you can see this thing failing because it's getting further and further away from the Bollinger Band mean, the Bollinger Band boundary at plus 3 as it fails. Here's one that failed at the edge of the floodplain. Here's one that's failing inside the floodplain. Here's one that failed at the Bollinger Band mean. Here's one that failed at the edge of the river. You can see how this thing is working. And here's another one that now fails, it fails right at the edge of the river once more. And on this one, I get short at 16,345 because I think as soon as it takes out the low of that little red doji where the last failure point is, I don't need any more information. And my sense is that if it fails through the support of this candle and that candle, is going to be a big candle and turn out to be one. So that's why I like to get short here on the evidence of repeated failures. Comes down to 16,338. Has a little bit of a rebound. Now it starts to fail even before it gets into the river. This time it got into the river. This time it looks even weaker on a relative basis. It's failing outside of the river in the floodplain. Get that second leg down. Gets all the way down to 16,330. And I'm holding 2.5 R in here, and so I don't let it come back from Z minus 3 very far. I go ahead and knock out my, because I'm only using a 5-point stop because it's around lunch, and I want a larger position size on this one to take advantage of those kinds of fail moves. So this one gets us from 16,345 to 16,331. It gives us almost 2.5 R. So I like that one. Okay, so those are the chat room case studies from March 5th, 2014. We looked at a variety of time frames. Here's a week-long regression line crossover swing trade being managed. Here's one on 15 minutes and the 4x pairs being managed, all using the same basic lens, and then the whole series of the YM Dow E-minis that illustrate a number of different of the regression line crossover patterns. So that's all for today. It's Ken Long from Tortoise Capital. Keep your risk measured and your powder dry. Come see us at tortoisecapital.net.